Here's a true story. A client of mine once paid all of their taxes on time, or so they thought. A few weeks later, the IRS sent them a $1,200 penalty notice, not for underpaying, but for paying at the wrong time. In today's video, I'm going to show you exactly how you make tax deposits the right way so you never waste money on penalties again. Most people think that tax season is April 15th and it's done, but that's not how the IRS works. They run on something called the pay-as-you-go system. So this means that the IRS expects you to pay your taxes as you earn income, not in just one lump sum at the end of the year. So here's a breakdown of payment methods. You have withholdings, which is taxes that come directly out of your paycheck. So this is great if you're an employee. Estimated tax payments. This is if you're self-employed or you own rental properties or you have large investment gains, you'll likely need these. Then there's payroll tax deposits. So for all you employers, you withhold employee taxes and then you pay this share on a fixed schedule. And here's where people get into so much trouble. The IRS doesn't care if you pay in full later. If you didn't pay on schedule, it's penalty time. So let's talk about the dreaded penalties. If your deposit is late, 1 to 5 days late, that's a 2% penalty. 6 to 15 days late, that's a 5% penalty. More than 15 days, now we're talking 10%. Oh, and if the IRS has to issue you a demand letter, it just jumped up to 15%. Add interest to that, and a $5,000 missed payment could cost you hundreds of dollars for nothing. One of the easiest ways to avoid penalties is to follow the safe harbor rule. So what's the safe harbor rule? You can avoid underpayment penalties by paying at least 90% of your current year's tax bill or 100% of your last year's tax bill. But keep in mind, it goes up to 110% if your income is over $150,000. So if last year your tax bill was $20,000, you can make $4,000 or $5,000 quarterly payments this year and you'll be penalty proof, even if this year's tax bill ends up higher. So let's get practical. Here's when payments are usually due. Employers, you need to make monthly or semi-weekly deposits depending on how large your payroll is. My go-to tool for clients is the IRS EFTPS system. It's free, it's secure, and you can schedule your payments in advance. No more forgetting. And let me just give you an extra tip. Set your calendar reminders for at least 2 weeks before each due date, and then also make sure you're double checking with your CPA. Here are some real situations I've seen, and I bet at least one will sound familiar. The 1 day late problem. So client pays on a Saturday, IRS counted it as late. State tax blind spot. You paid your federal on time, but you forgot about your state quarterly payment. The seasonal income trap. Big summer sales meant a huge September payment, but they didn't adjust. And then there's the January 15th surprise. You thought April payment would cover it, and then you got a penalty notice instead. That's why I've created the tax deposit and penalty avoidance checklist. It has all the deadlines, the safe harbor rules, and quick tips in one place. So let's hop on a call and help get you organized. Remember, with taxes, timing is everything. You want to follow the schedule, you want to use the tools so you can stay penalty free. So if this helped you, hit like, subscribe for more tips, and click on the button below to hop on a call with me.